I'm Charlotte McLeod with the Investing News Network, and here today with me is Frank Holmes, CEO and Chief Investment Officer of U.S. Global Investors. Thanks so much for being with me here today.
It's great to be with you.
Great. So let's jump right into the questions. I want to start by talking about gold. We made it halfway through the year, and I know your commodities halftime report shows it was the top performer in the first half of the year. We also saw this week gold break $1,800 per ounce. So I want to know, in your mind, what's been the most important factor in gold's rise?
Well, there's no doubt if you look at what they call the golden cross, where the 50-day moving average goes above the 200-day, which is really important to look at because you're talking about 10 weeks and 10 months. In the first quarter of 2019, it went positive, and we had a big run to August and a sell-off, but it always remained positive. That is, the 50 days always remained above the 200-day. And last year we saw a lot of hedge funds, highly regarded multi-billion-dollar hedge fund managers, start looking at gold as an asset class. So we were in that sort of movement. And then we also had gold stocks all of a sudden started repairing their balance sheets, their income statements. Gold was rising, and there's better discipline. And you saw that the universe of 100 gold producers we follow, they went from a negative free cash flow to positive at the end of March. So the coronavirus accelerated this gold movement because it accelerated money printing globally. And I think that if we look at just the Fed, a case study of 2008-9, when Lehman went bankrupt, the amount of cash that went in from the Federal Reserve's balance sheet to stimulate the economy was something like $3 trillion. And I said earlier this year, it's going to be 10 trillion. And so we're seeing now 7 trillion. That's showing up in the market with zero interest rates. So it's unprecedented to have G20 countries, negative real and zero interest rates. Gold becomes always extremely attractive under that paradigm. And I said, if it follows what happened in 2008, the money growth, then 3 years later, it went from 800 range to 1900. And if we take a look at the last money printing, we're going to go from 1500 to 4000. So I think over the next 3 years, there's a high probability of gold going to 4,000.
Okay, that was going to be my next question. That gives us a great idea of how gold got to this level, but perhaps more importantly for investors, can this price level be sustained? And it sounds like yes, and even exceeded quite a bit.
What's important is to not forget there's an automatically offtake of gold by the love trade. And the love trade consumes close to 60% of all gold. Indian women wear 6 times the amount of gold that's in Fort Knox. It's really important to recognize that the GDP per capita of China and India, 40% of the world's population, is highly correlated to the love trade. And why do I say that? If we go back 30 years ago, China and India were only 10% of gold demand. Now they're their population. They alone are 40% for this jewelry consumption. And I think the last data point came out that they're 51% of all gold, both central bank and glove trade, are China and India. So I think that that's a key demand, slow incremental growth. Then we have peak gold supply, and it's very hard to discover. And the life cycle of bringing on a new gold deposit is not getting any better. And so therefore, with all this money printing, it looks like gold can easily surge. And we forget what happened to palladium in 2018-19, in particular 19, out of nowhere, it went from 1,000 to 2,700. Why can't that happen again to gold? It's very feasible. And you don't have a war. You just have this new money printing. And what I think is really important, Charlotte, is that the G20 finance ministers and central banks operate like OPEC as a cartel. And they are not fighting with each other to who's more attractive. It's about, since 2009, synchronized taxation and regulation. And now it's synchronized money printing to get the global economy around. This is good for gold.
Okay, and the path higher, because we are going higher, does that look like a steady uptick as we have this demand coming and supply shrinking, or would you see corrections at some point? How does it look to you?
No, I don't see any Mother Nature says there's no new technology like the fracking industry was so destructive to oil. There's nothing new. And only Superman can see through rock, and he has problems with lead. So let's be real, it's very difficult to be able to see through rock and find these big baskets of gold. But I think there's certain regions like Colombia will heat up again. It's narrow veins, but it's very high grade gold. We see the Chinese on a global march of acquiring assets all over, recently in Guyana, and it looks like there's going to be another acquisition made there. And I think that we're seeing this sort of change take place, but the timeline from a date of a big discovery to finally getting that ounce of gold to enter the market is very long.
Okay, so tell me what's going on with gold stocks. You've been talking a little bit about what's happening with the companies. I know that some of them, maybe most of them, have been boosted by the rising gold price, but where are we seeing the biggest gains?
Well, what's important when you look at producers, in particular producer world, is companies now have to have the discipline of free cash flow to attract the non-gold fund manager. The non-gold fund manager doesn't care about NAV valuations, doesn't care about 20-year mine life, 50. They're caring about how you're maximizing your cash flow for the next 3 years. And the Australians have shown that. So this operative word called free cash flow. And what's interesting to me, I've been speaking about this for 3 years now, that those gold stocks that show rising revenue last quarter over the average over 4 quarters and cash flow last quarter over 4 quarters will attract the eyes of a technology screen. And if they have yields, free cash flow yields, they attract income-oriented investors. It's much bigger universe of buyers ever than it's going to be a bunch of gold fund managers. And so we're seeing that Newmont's now advertising, marketing that they have free cash flow. Barrick, they are now 30% two stocks of the GDX. In England, I think it's like 40% of their gold index ETF. So if you're seeing companies like Yamana advertising it, we see Nova Scotia, Bank of Nova Scotia, advertising what stocks have free cash flow and don't. It's an important new word. And the other one is this sort of free, not just free cash flow, but your gross margins. So royalty companies have high gross margins like Microsoft, Franco-Nevada, Wheaton River. So they've done exceptionally well. Sandstorm's done exceptionally well. And so in a rising gold market, they have high margins, high revenue per employee. That's very attractive to the non-gold fund manager. And if they have liquidity, they say, buy me new, Mike, buy me, give me more growth. I'm going to buy the royalty companies and I'm going to buy the Sandstorms of the world.
Okay, so for investors, what should they be doing right now? I know there's a lot of people seeing gold's price rising, the stocks going up. It sounds like there's still time to jump in. So what's the best way to do that?
Yeah, well, first of all, is have a philosophy and understand why the golden rule, having 10% in gold, is just prudent and wise. And you can mix it up with GLD, or you can mix it up with individual names, or a royalty company I love is very low risk, or you can turn around and buy GoAU, which is our ETF we launched in New York, and we just went through $100 million yesterday. But what's more important about that is it's very selective, and it goes down to $200 million market caps, and it's looking for those quality stocks. Then as soon as they do something stupid, like a merger that dilutes the revenue per share or cash flow, we kick them out. And I think if an investor is going to buy the individual name of a gold stock, then they have to make sure management is demonstrating free cash flow, because it means they can increase the dividend and they increase the liquidity. So I think that that's for investors. Now, when you go down to exploration and that more speculative avenue, you have to look at the jockeys, not the horses. Now, really, the jockey is so important. Their track record of creating wealth. A lot of these guys go and they make jobs for themselves, raise money, kick salaries. have a lifestyle. They're lifestyle companies. They're not really good results-focused exploration companies. And so one has to be very sensitive. And with the internet today and news wires like yourself, you can easily find out those companies and those names that who have a good track record.
Okay, I have one more follow-up question. Just you were saying that when companies do a merger, they get thrown out of the ETF. Can you talk a little bit more about why that happens? Because we've been seeing so many mergers and acquisitions in the gold space recently.
Well, they stay in the GDXJ, and something like 40% of the constituents that make up the GDXJ, 65 names or something, have diluted shareholders. Key factors. They've diluted their reserves per share. They've diluted their cash flow per share and their revenue. And immediately those stocks get put in the penalty box. What we do at GoU is that as soon as a company does a merger that's going to dilute revenue and cash flow per share, reserves per share, they're out, they're gone. And I think that what we've seen also with GoU, it's had many takeovers because we're seeing that those taking over company A, taking over B, usually they're undervalued on a relative basis, which have cash flow, higher margins, higher cash flow returns on invested capital. They're the ones that get bought out. And I think investors want to take a look at, my favorite metric is cash flow return on invested capital. Who has the highest? That means good management. That means a good mother nature, a geological deposit. If you get good management with good mother nature, it's an easy way to make money in a rising gold scenario.
Okay, great. So I want to move over to silver as well. I feel like a lot of people have been a little bit disappointed in silver this year. A lot of investors want to see it over $20. It's not quite there. Can you tell me a little bit about what's going on with silver and the price potential there?
Well, it's one of those things that wind up, and silver's always been a warrant on gold. So we've seen, looking back over regressional studies, that after you get a sustainable run in gold, you get a 50% bigger move in silver. And it's just a matter of time. I think the bigger differential is that silver is more important as a industrial commodity than gold. And the same thing with palladium. So we look at this year to date, the best performing precious metal is gold. Then we have silver, and then we have palladium. And I think it's interesting, now copper's making a big run. And what's really important for you all to recognize is that the coronavirus can't live on those metals. They don't live. So coming back on the movement of silver, I think we're going to get, as this gold runs, a super surge in silver and silver stocks. I always recommend best gifts for kids is a silver coin. They don't throw it out. They keep it. Any other present, they use it quickly and it's disposed. Silver they keep. They just make wonderful birthday and graduation gifts.
Okay, and platinum and palladium, you mentioned that people have already forgotten palladium's really high price rise, which wasn't all that long ago. What's going on with those precious metals? Where are they at right now?
Well, the two things happened with palladium. Well, 3 years ago when we had the crisis, almost 4 years ago, where Volkswagen got caught lying and cheating, and all of a sudden there was a big rotation from platinum to palladium. And the palladium supply, which is basically 70% comes from Russia, was in a decline. So as we saw the supply declining and inventories declining in palladium and demand picking up for cars, it surged. Now car business has slowed off because of the coronavirus. But what's interesting right now is not just the Teslas and lithium and things of that metals, but I think that more people are driving to work. They do not want to get in a congested bus or a car, and they don't want to get in some Uber right now because they want their own car, which they've sprayed with their own alcohol so that it's clean. And so virus-free. So we're starting to see car sales pick up, and I think that will be an important part for the palladium.
And platinum, is platinum being a little bit neglected in this scenario?
Yes, platinum's, I would say it's neglected. There's no doubt. Gold is the precious commodity. You know, it's been around for 5,000 years. It's mentioned in the Bible over 400 times. When you add the Old and New Testament together. So it's just embedded in the culture and the psychic. It starts at the beginning of the Bible, it ends at the end. And I think it's the most popular printed book in the world. So it's just not going to go away.
Okay, and now I have maybe a little bit of a fun question. I know circumstances this year have been very unusual at the global level, and I wondered if beyond commodities, there's any other investment opportunities that you're following right now.
Well, yes, I think if you're a blue chip investor, you got to buy Clorox. That's the luxury goods of bleach, etc., and rising dividend. And you have to think this way now. When they finally come up with who's the breakthrough for testing for coronaviruses, I think that that's important. I also noticed, the Bitcoin and Ethereum, they've surged along with the gold market and the stock market. And I think, as the chairman of Hive and tracking that, Hive is a proxy for those that do not want to go to these crypto exchanges and buy it. So it is actually correlating 92% of the time with Ethereum. And Ethereum is up substantially and it's moving up and down with the stock market in gold. That to me is most interesting. And this money printing, what we're seeing globally is Switzerland is buying Apple. Their central bank floats a bond issue. Very few people buy it. The government buys it themselves. The central bank takes that cash. They go buy dividend paying stocks because they floated a bond issue at a zero interest rate. The Japanese. So we're in very unique times where even the Federal Reserve is buying $52 billion of an ETF on corporate debt to get interest rates down for the economy. That's never happened before, but it's been going on with Switzerland. It's been going on with Japan. So one has to take a look at they're buying technology stocks. So, I love Home Depot. I love Google. I love Microsoft and Amazon. Oh, that's just a hero of the stock. We get food delivered the same day. And how often. So I think that these companies all have what I was mentioning earlier, like the gold stocks are showing high revenue growth, cash flow, and free cash flow to grow with. What's interesting about the S&P 500 is that as a whole, at the end of December, they were like 2.5% free cash flow as a yield, they call it. And the gold stocks were flat. By the end of March, there's such devastation that the S&P went negative and the universe of 100 gold stocks we follow went positive. So all of a sudden in that rebound from the March lows, bullion say is up 20%, GOAU surged like 90%. So there is money going into gold stocks. And I think when you step out of that arena, the same factors to why you want to buy a gold stock, you want to take a look at buying some of these technology names, which are game changers in the world of delivery of food and logistics.
Okay, that was great. As we wrap up, are there any final words that you would leave people with for the second half of the year? Any pieces of advice, things you think investors might be missing at the moment?
I think that investors have to realize this is a very different paradigm. But if you go back to the Spanish flu, what took place back then, wearing masks was the number one important decision to make. Spain shut down the second surge, shut down all bars and restaurants, but people could go to work and do things, but they had to wear masks and the social distance. And when it comes to investing, stick with companies. We're going to stay with negative and real interest rates, negative and zero interest rates. Stick with those companies which have growing revenue and cash flow, and they're the ones that are going to outperform because all that money is got to find a home that's giving a higher yield, and they're reaching out. So you've got a 10-year government bond in America paying 60 basis points. Well, I can get that off of Franco-Nevada gold stock. So, and with growth. So I think that you want to look at those stocks that have that capacity and companies like the Microsofts of the world.
Okay, well, thank you so much. It's always great to get your insight. I think we can leave it there. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Frank Holmes with U.S. Global Investors.